Welcome to Monday's Market Outlook here at Top Gun Options. Matthew Buckley, call sign Wiz, and this time next week we'll be starting our next full throttle, full week of live trading and training here at Top Gun Options. So make sure you keep an eye out on your email if you're not currently a member or you're in a 2-week test flight or any of those things. Big week next week with full throttle, and we're going to have a great time trading, especially with everything that's going on in the world, folks. The North Korea things, once again, going to pop up on the radar here. We have President Xi flying into actually a couple miles north here up to Palm Beach to meet with President Trump. Obviously, trade is going to be kind of big, but the biggest thing on the radar right now, folks, that I've been beating a drum here, and I know a broken clock is right twice a day, but it's eventually this is going to come to a head. It doesn't end with Trump backing down, and it doesn't end with this short, fat guy that McCain called him backing down, okay? And this high-level defector did an interview with Lester Holt and said, hey, you guys really don't know who you're dealing with. This guy will use these. He is a lunatic. And the whole liberal narrative of kind of putting this on the back burner, or he's a couple years away from, putting it on missile and sending it to Seattle. That's a lie. He can hit Admiral, his call sign was Not So, Admiral Not So Bright, who was the commanding officer of one of my sister squadrons on my second cruise on board Kitty Hawk. Great American. 4-star admiral. He's like, they can hit us now, folks, with a vehicle that they have. More importantly, folks, they can put a warhead in a cargo hold of a ship, pull it into Seattle, San Francisco, San Diego, and blow it up. So I don't know why we're focusing on him just putting on a missile when he can deliver it anyway. So anyway, again, Monday morning, good morning. Yeah, Wiz, this is great. Thanks. But you have to look at these things because when you wake up and the futures are down 1,000 points and your 401k is a 201k, I'm not going to have any sympathy for you. We have our hedges on here at Top Gun Options for these type of black swan events or these disaster events. And actually, they're up $1,000 today, our hedges, as the market's just swirling around here a little bit. So big things on the radar. Like I said, the president meeting with the head of China this week, trade, North Korea. And then here we go with the whole Russia story here in the United States. The liberal media really throwing a shiny red ball to half of the American people because they're stupid and following this Russian Trump thing, when the story is actually Susan Rice and a bunch of the Obama heavies unmasking, first of all, monitoring Trump and his transition team, and then unmasking them illegally. Susan Rice should end up in prison, and maybe even Obama. This story is going to get huge if the media actually does its job, which of course it won't, and that's why Trump won. But anyway, folks, let's talk about the market. Enough ranting. I got to cut back on my coffee here. Global shares tick higher as the new quarter begins. Here's what's interesting. As the new quarter begins, what was good is bad and bad is good. So I know the financial shares got a little punished towards the end there with the implosion of Obamacare not being repealed. Oh my God, that means financials are going to get hammered because he's not going to pull back regulations or tax relief. It's all a ruse, folks. That pullback was a gift. I told you JP Morgan, Goldman Sachs on a pullback is a gift, and it was. Had a really good weekly options trade last week, a bear call spread on Goldman Sachs that helped out a bull put spread that I had on in the primary portfolio. But financials are going to catch a little bit of wind. And then first day of the quarter here, it looks like technology stocks, which were in Fuego, are taking a little bit of a break. So a little bit of sector rotation and moving the shells around here as we begin a new quarter. And we're going to talk about that a lot tomorrow morning at 10 a.m., in the primary live trade brief. Today I have my weekly options live trade brief at 1 o'clock. We talked about this bank stocks pause after post-election surge. The pullback reflects a Trump administration struggle to win support in Congress and a slowdown in business lending growth that caught many by surprise. Yawn. Buy on this headline, and we're going to talk about this. Already talked about the big event in the coming week is the president meeting, but we do get FOMC minutes from the March meeting. The spoken word was pretty dovish, and that's not what the Fed, I think, wanted. They wanted to sound a little hawkish, but no offense, but the little old lady type of approach, she sounded pretty dovish, and the market rallied on it, remember? Right about here, and they were a little surprised, so a lot of the lieutenants ran out. Was it Evans or bunch of the lieutenants came out and tried to be pretty hawkish and kind of talk the market down. But market didn't listen, and we headed up a little bit. We got some macro reports. The biggest thing on the flight schedule for this week, other than nuclear war and trade, non-farm payroll. So we'll get the April non-farm payroll. Average hourly earnings, folks, has been flat. That's a very important metric to watch. Yeah, it's great to be adding jobs, but if we're not making more as time goes on, we're just kind of stagnating here. So we're looking for about $1.76. That's the government number. Obviously, with the government on Friday, we get ADP on Wednesday, and they're actually calling for a little hotter with 191, and the unemployment rate to stay unched at 4.7%. We'll get some random economic reports throughout the week. I think we get ISM today. Yeah, we get actually. Let me hit refresh here. We got ISM. And that's why I think the market might have pulled back a little bit as I've been talking to you. That's flat. Construction spending came in a little bit. Manufacturing prices went up. Yeah, so not the best news with ISM. Tuesday, factory orders. Fed Lieutenant speaking, ADP on Wednesday, like I said. ISM non-manufacturing PMI on Wednesday. The Fed minutes, like I said. Crude oil, as usual, on Wednesday. Thursday, the Challenger job cuts, and then Friday, like I covered, non-farm payroll. So it's going to be interesting. We're going to take a look at this 2060 line here in our weekly options live trade brief. It's been it's been that back and forth battle. Was support here in February, support here in March, blew through it on the oh my God, Trump can't do anything, and then it was a little bit of resistance, and we powered through it. So as you know, is this a dead cat bounce off this 50-day moving average? We nailed this with a couple of our trades over the past couple weeks. I said we're going to bounce off this 50-day, but as we bounce, it's kind of like, okay, and now what? And I think we're going to go right back to this 2060. We're at 2359 right now, and I think we're going to, or 2360. Oops, sorry, that's the Dow, SPX, 2360. We're literally kind of right there, folks. So there it is. There's the 2360 line, and just the feel of it right now out of the gate. And let's kind of let's connect the dots here. What's that? That's a lot of lines on there, but I'm no chartist or technician or something like that, but that's a pretty tight, it's like a Venturi tube. Let me talk to all my aviators out there. A really tight trading band here, and it's either going to pop up or it's going to pop down. We're not going to channel here forever. So the bias should be up. We covered the report by JP Morgan last week that said, the bias is going to be to the upside, barring just in your face, he's not going to be able to get tax stuff done. The bias is going to be a melt up. Okay, so again, we're just kind of wallowing around here. I'll talk to my weekly options member shortly about our SPX trade for the week, and then we should be good to go. Okay, going to be a busy week here at TGO, so strap in, and I will be back tomorrow with our Tuesday market sit rep. So have a great rest of your day. Happy hunting. Make sure you get some hedges on, folks, whether it's North Korea, Trump can't do this, or Russia, or whatever it is. It's time to have some hedges on, especially with the VIX doing something like this. Okay, we had that big spike last week, and then we got smashed back up. It's a heart rate monitor, folks. Up, down, up, down. You could almost be, with everything that's going on, you could almost be day trading the VIX. I wouldn't recommend that for amateurs, but this is, vol is still cheap right here. Look at this. The 11 line, which is nuts. It used to be 12. The 11 line here, right, that's kind of the VIX's resting heart rate, okay? So whenever you see an 11 in front of this decimal point, the market thinks vol is cheap. And then it looks like this 13 line, vol is expensive. Write that one down. When vol is cheap, you buy it. When it's expensive, you sell it. So either I showed you that kind of triangle forming on the S&P 500. We're either going to pop up or down, and if it's down, the VIX gets smashed down, and if the market pops down for some reason, this VIX is going to smash up. Okay, if you didn't follow any of that, make sure you sign up for our full throttle week, and I'll talk to you guys about that. Okay. All right, folks. I'll talk to you tomorrow with Tuesday's market sit rep.